Good morning. Welcome to Yahoo Finance Live on this Jobs Day Friday. I'm Julie Hyman. Brad Smith is right here next to me. Brian Sozzi on assignment from home. So let's take a look at futures ahead of the jobs numbers here this morning. We're seeing a mixed picture. Not surprising here. Folks are waiting for the numbers. So let's run through the expectations quickly here. The estimate for non-farm payrolls themselves, a gain of 255,000 here. Private payrolls as part of that, 275,000, and manufacturing 20,000. The unemployment rate estimate at 3.7%, which would be unchanged from August, and average hourly earnings predicted to have risen 0.3% on a month-over-month basis, and as you can see there, 5.0% on a year-over-year basis. I will be also paying attention to the inflation-adjusted change in wages, because as we know, if you account for that hot inflation we have been seeing, you actually made less money year over year, Brad.
Yeah, there's a ton to really keep an eye on here, and especially on the instant reaction and the major averages here. Even as we're holding on to slight gains going into the start of today's trading session, that's still about an hour off, and really the fireworks going to take place just about 3-ish minutes from now. And so one of the other kind of things that we've been watching in this mega week on the employment front is that private payrolls data that came in, and of course it was a bump higher, but there were actually some segments where we actually saw jobs that were stripped out of the employment report. And so with that in mind, we're going to be keeping a close eye on just a few of those sectors within the realm of those declines: natural resources and mining and manufacturing. But then even more so, some of these cyclical elements of this going to be key to watch, because in the private payroll side of things from ADP earlier this week, largest gains in trade, transportation, utilities. We'll see if that kind of mirrors in this BLS report as well, Brian.
Hey guys, I like doing this from home. I'm watching that countdown clock. I'm feeling a little anxious and nervous, but the market should, because I think this market is one that wants to see a report somewhere around 150,000 or less. This is a market that has rewarded recently bad news on the economy. But look, here's my chart that I'm watching too. Really cool chart that caught my attention from the folks at DataTrek, and they were tracking Google searches for people looking for a raise. Now that number is up 54% year to date, but I don't think that tells the real story, because it's basically been flat, those searches, since April, which really I think might give you a good clue on maybe these Fed rate hikes that have started to slow the economy, have started to cool the job market, people feeling a little less confident to get their boss in a meeting room and ask for a 25% raise. So interesting chart right there for DataTrek. I just tweeted it out. If you have comments on it, hit me up.
And just to take a step back here, what we're looking for overall is a hot jobs market, but not as hot. That's what all of these indicators are sort of pointing to. We also got job openings from the BLS earlier in the week. They were down by 10% in August to 10.1 million from 11.2 million the month before. So another sign of this sort of slowing here. And just to put things in perspective here today, guys, we're looking at 255,000 being added. The monthly average gains in the first half of the year were 440,000. So that just shows you, yes, it's still growth, right? It's still pretty good growth, but it's just not as much as it was. Yeah,
it's interesting, because one of the questions that I'd love to get into our guests later on after the numbers drop is one that was also raised earlier this week with one of the Harvard economics professors, which is something anecdotally I was asked over the weekend, this past weekend, is this still a safe time for job hoppers? Is this still a market where you can depend on a higher wage if you are to leave one comfortable position perhaps, or a position where you may have been quiet quitting, who knows, and going into another position where you've either tried to upskill or finally getting that option at your dream job? And is it still a good time to do that? And we'll see exactly where kind of the data continues to spell out whether or not that truly is the case, or whether, based on the JOLTS data that we had seen earlier this week, because of some of the openings actually retracting a bit now, whether that's starting to dwindle a little bit.
I think it definitely seems to be, certainly on an anecdotal basis, right? There's also going to be the parsing of the data today. If the data comes in stronger than expected, what does that do to expectations for the Federal Reserve sooner rather than later pausing in its rate hike cycle? So we might see some sort of counterintuitive moves to these numbers. So that's something to keep in mind even after the sort of initial jockeying.